Hello and welcome to Fidelity Connects. Canadians are headed to the polls. Just 9 days after being sworn in as Prime Minister, Mark Carney has called a snap election for April the 28th. Amid growing concerns around housing, immigration, and an unprecedented trade war, voters are being asked to decide who they trust to lead the country going forward. So what does this snap election mean for investors and ultimately the economy that we live amidst? And how might each party's platform impact key sectors? Joining us here today to unpack what you should be watching for in the days and weeks ahead, I'm pleased to be joined by Institutional Portfolio Manager at Fidelity, Ilan Kolet, and political journalist and editor-at-large at The Hub, Theo Argitis. And from here, we say welcome to Ilan and Theo. Theo, let's talk a little bit about your time at Bloomberg for many years. You've been a political journalist for many years in Ottawa. And in fact, the characters that this country is about to vote on are people that you've been following for a lot longer than probably most of us. Take us back a little bit to say 10 years ago, prior to the Trudeau government coming to the fore. Who that we see now was there?
10 years ago, it was the Harper, just over 10 years ago, it was the Harper government. And so that was the tail end of the Harper government. But my time in Ottawa goes back 20 years, where I moved to Ottawa in 2005, which was the tail end of the Paul Martin government. And so I got to see a little bit, 1 year of Paul Martin, and then I got the full Harper government experience, and then most of the Trudeau government experience up until a couple of years ago when I left journalism temporarily to join a public affairs firm. And now I'm back in journalism as of last week, and I'm really keen to kind of write about, a very important moment in Canadian history, not just political, but just I think more broadly, it's a big moment for us, and I'm really keen to get back into it and write the stories that matter. And as far as the kind of the two, let's call them protagonists in the coming election, I mean, I've known Carney since he was the senior associate deputy minister at finance. When I moved to Ottawa to cover Canadian politics, he was at the finance department, and I've covered his career, for the last 2 decades.
Fantastic. And this gentleman next to me worked at the Bank of Canada, and then he worked for you. You were his boss. You were Ilan's boss. So welcome back, Cotter here.
Yeah, no, this is, from my perspective, this is a real treat. I've been trying to make this happen for a little while. I had the pleasure of working with Theo in the Ottawa Bloomberg Bureau from 2010 to 2014 before I joined Fidelity. And the reason I was so keen to bring Theo on today is because he is unquestionably the source that you need to follow either on LinkedIn or from the Hub directly in terms of anything that's happening in Ottawa politically or the interaction with monetary policies. And he's a direct input into our process as well. And he knows the Davids very well as well.
He knows the Davids very well. Well, you and the Davids have been setting the course in terms of positioning through what is, by all accounts, a very volatile time for this country. It is unprecedented. Just give us a little bit of the ABCs of how you have adjusted positioning for the portfolios.
Sure. Yeah. I mean, this is something that we discussed in COVID was an unprecedented use of the word unprecedented.
I know, it's so
right. And here we are again. And we put out a thought leadership paper last week. It's our Q2 paper. We're not in Q2 yet, but we needed to get this paper out. It's a short read, it's a quick read, and it's called Elbows Up. David Tulk was on last week. I know he spoke about it, but at a high level, there's been important changes to our positioning. So if I use our 60-40 stock bond fund, the Global Balanced Managed Portfolio as an example, for many, many months, we were optimistic around the US, right? So we were leaning into the US really from September of 23 because of this US exceptionalism story. And last year, that certainly paid off, right? But following the election, we made important changes. We expanded the underweight to the Canadian dollar. Again, we were prepared for thicker borders and the tariff threat and the likely decline of the Canadian dollar. But more recently, what we've done is, while we remain optimistic on equities, we've pivoted away from the US into the EFI region, right? So the Europe and the Far East, right? Because what we're observing there, we believe, is sort of a galvanization of Europe, and the underpinnings of the U.S. exceptionalism story. We think they're not crumbling, but they're facing some stress at the moment, right? So we're not underweight the U.S., right? We're sort of neutral to the U.S. right now, but where we want to give more of our stock pickers sort of more room to move is in Europe, and that's how we've pivoted. And then the other thing that we've done really quickly is we've added to inflation protection, right? So stagflation is something that is back in the headlines. I think it's my least favorite word, maybe after inflation, but the stagflationary shock, I would say, has increased in probability, and we want to take precautions in our funds to protect our investors against the damaging effects of inflation, and that's been adding to the commodity sector as well as on the fixed income side tips.
Okay, yeah. Fascinating. So fascinating to see how that comes together as we sort of look at this platform. Theo, I'll ask you, because you mentioned IFA and being a bit more exposed to Europe, I wonder if you can just kind of go back into the fact that, for instance, Mr. Carney spent an awful lot of time in England. There are changes in the European story, just like there are in Canada right now, like real shifts in terms of defense and lots of other things. Take us a little bit into what you see in this political platform. What are we debating in this country right now? We know tariffs, but sort of internally, what are we turning the dial on?
I mean, that's a good question, and I guess it depends on who you ask. So the election campaign, if you ask the Carney campaign, they're trying to minimize the differences. They don't want this to be about a policy they don't want this to be a policy campaign. They don't want to kind of compete with Poilievre on policy. In fact, they're adopting a lot of the conservative policies. They want that battlefield to be a very, very narrow one. They want to fight this campaign on leadership questions. Who's the best leader to stand up to Trump? So on the issue of policy, the Carney campaign will not really want to get much into that. Poilievre actually does want to talk about policy because, I mean, it's his policy that is kind of being he was ahead on a lot of the policies that the Liberals now are dropping very, very quickly, and he wants to kind of make that the wedge issue. Having said that, I mean, obviously there are a lot of differences still, even though the Carney campaign doesn't want to promote those differences. And the differences are largely around kind of how they're going to deal on the fiscal side. They do have different growth models, and we can get into it as well. Climate change and the climate transition and how that impacts growth is also a key issue, and we can talk about that. On the U.S. and how to deal with the U.S., despite the fact that Carney is obviously benefiting from the shift of the ballot question from being kind of a question really about Trudeau to a question about Trump, that Carney has benefited from that, but at the same time, I don't think there are actually a lot of differences there. Both sides are talking about retaliatory tariffs. Carney is talking about maybe not dollar for dollar. Poilievre is still, from what I know from the latest, that he's still on the kind of larger retaliatory tariffs kind of in that realm. But I don't think you're going to see a lot of differences there on the U.S.-Canada side. I think the big differences are on climate, transition, and probably fiscal.
What do you think about, Ilan, some of the backdrops for what the economy is about to get hit with? I mean, we know that there are some fiscal levers that probably any government in control would be pulling if industries are essentially taken out because of tariffs. But just tell us a little bit about, we're watching the Canadian dollar. It has dropped. We know the story there. It's had a few bounces around. It's been surprisingly resilient.
Yep.
Just give us some thoughts on how you think the economy is expressing itself.
Sure. I mean, so to set the stage, we should talk about tariffs, right? So I mean, what do we know about tariffs just to set the basic framework? These would be exceptionally damaging, right? Now, any analysis of tariffs, you have to make three assumptions. How big is the tariff, right? It's been 25%, and then it's been 0, and then the can has been kicked. So that's the first assumption. The second one is, what is the list of items that faces that tariffs, right? Is it everything that gets exported? Are some at different levels? And the third is, how long do these last? What we know is about a third of Canadian GDP is exports. I mean, to put that in perspective, housing is about 10%, right? So exports are the historical driver of Canadian growth, and 75 or 80% of those exports go to one customer, which is the US, right? So this is a very, very difficult situation because we have one customer, and I'm sure Theo can talk to diversification of trade and removal of trade barriers, but that doesn't happen overnight, right? So we have one customer with 80% of our exports going to one place, and the Bank of Canada's own analysis in the April 2019 monetary policy report, and then updated in the January monetary policy report this year, showed really significant damage coming from a 25% permanent tariff on all Canadian exports. You know, a 4 to 6% decline in GDP over 2 years, right? That's probably 800,000 to 1 million jobs over 2 years. That's enormous. That's a bigger decline in GDP than the financial crisis or the 90 recession or the 80 recession. An upward shock to inflation, a permanent reduction in potential growth in Canada, and a depreciation of the Canadian dollar, right? So the takeaway should be bad, yes, right? And again, the way I've sort of discussed it is, what are we doing? Right? We have an underweight to the Canadian dollar, we have more inflation protection, and we've pivoted out of the US. And what are we not doing? We're not reacting to every tweet or headline or gesticulation by any leader of any country day to day, right? So the way that we achieved a high ranking of peers beaten and the results at the 1, 3, 5, 7, and 10-year horizon is a slow and deliberate process to portfolio management.
Yeah, no, it's fantastic, and that's what people need to hear in moments like this. Theo.
Yeah, if I can add to that, I would distinguish between two different types of tariffs. One is the U.S. tariffs, and the other is the retaliatory tariffs. And the reason why I would distinguish that and how these things unfold, and I think how these things unfold matter, because on the U.S. kind of tariff side, that's clearly kind of an action that will impact Canadian growth, as you mentioned. That's kind of negative for growth, for Canadian growth. But it's also ceteris paribus kind of deflationary, right? Because we'll have negative growth, which will create this negative output gap, and weaken the Canadian economy, and you'll see kind of inflationary pressures fall ceteris paribus, all things being equal. But the moment you start retaliating, you actually create that stagflationary environment, because you're essentially, and this is the interesting thing about this election campaign, actually, it's the first time that I remember where you're going to have a government that actually is going to increase taxes on Canadian consumers in the middle of an election campaign, and that's what retaliatory tariffs are. It's a tax on Canadian consumption goods. So I mean, essentially imports from the U.S., but it is a tax on Canadian consumers, which will drive up the price of things. And you're going to have an opposition party that may be saying that those taxes are not high enough, right? So it's going to be a weird situation where. So there's two variables there. One, what is the U.S. going to do, and what's the impact on the Canadian economy? And two, how is the Canadian government going to impact, and that will determine, how much of a stagflationary environment we're living through.
I want to ask you, Theo, which one you want to start with, because we'll go through some of the platform issues that are being discussed. They were being discussed right up until we came to air here. So you can go through security, you can go through defense, we can go through the taxes, the removal of taxes. What do you think is the most important of the platforms that is being discussed? I hear you that Mark Carney, to an extent, is hoping to not get too deep in the weeds. But what do you think of those being discussed is the most important? I guess we'll put tariffs aside for a second.
Well, I mean, what I would like to see from both parties is kind of what their plan is for research development, and because research development is important for two reasons. One, it's the one kind of industry that maybe the only industry that Canada has a competitive advantage in globally, and it's kind of what we do really well, and what we will rely on to get out of a very difficult situation. So,
Like what?
you know,
Like what research?
what they're going to do on resource development, like
Resource
oil and
development.
gas and
Okay,
energy
good.
and
Sorry,
energy
I misheard.
energy infrastructure and that sort of thing. So I want to see kind of what plans they have for that. In Carney's case, he has to reconcile that with a climate transition agenda that is inconsistent really with his kind of with liberal party's newfound enthusiasm for Canada's energy sector. So, you know, I want to see what they have to say on the resource side and how that kind of feeds into their climate transition plan. With the conservatives, I mean, you know, the bar is a little bit lower. We know that fundamentally they're more supportive of the resource sector. In that instance, the question is, do they have a climate change plan that is actually credible? And you know, because as you know, people have been pointing out for years, you also do need to have a climate change plan in order to be kind of a respected global trading partner outside of, I guess, from the U.S. So that's one area that I'll be looking at kind of as kind of a significant kind of policy kind of ideas in terms of what in terms of important policy ideas. The other areas on the fiscal side. I mean, we've got Carney, who has indicated that he's going to be prepared to spend and he's prepared to borrow to invest in investment. So he's talked about kind of splitting the government budget into kind of an operating budget and into capital budget. But he's clearly signaling that he wants to use the fiscal levers to get more investment into the Canadian economy, and we'll see what that means for for Canadian growth, for example. That could have implications, and there's a good argument to make to use the state to kind of fill in the gaps that are going to come with slowing growth. At the same time, and we've seen this in Germany, so I actually believe that we're going to get a little bit of kind of a replication in the Carney kind of platform of what you're seeing in Germany and also in London as well, in the UK with the Labour government. For the Conservatives, they're going to be less willing to use the state fiscal levers to do what they need to do. So they're going to have to come up with their own plan on how to boost private investment. And we'll see, just getting rid of legislation, kind of project approval legislation that they claim that, what they call the no pipeline law, that the C69, that makes it very cumbersome to get permits and that sort of thing for energy infrastructure. I don't know if that's enough in this environment just to get, regulatory approval is probably not sufficient. So maybe will they lower taxes? Will they call for lower corporate taxes? So we'll see. These are the two kind of areas I'm looking at: fiscal, resource development, energy, and that sort of thing. So in terms of the kind of the retail stuff, it's going to be pretty much the same: a tax cut here, a tax cut there. Fundamentally, these are the two big things for me: is fiscal and resource development.
Did you want to pick up on something? I want to ask you about investment, but go.
Yeah.
Go for it.
So I mean, I think I completely agree with what Theo was discussing. I think it's really, really interesting. I mean, to me, stepping back, Canada has a productivity problem, right? And
yes.
I know Theo can talk at length on this as well, but I mean, we've looked at those charts with productivity in the US being a straight line up since the 1950s and productivity in Canada being a flat line since the mid-90s, right? So the one thing I joke sometimes, the one place we've been really productive is talking about productivity, but it hasn't actually resulted in meaningful productivity growth, right?
Yeah.
And this is, I mean, again, the best speech I think is that March 2024 or 23 speech from Deputy Governor Carolyn Rogers, this break the glass moment. Yes. for Canadian productivity. We are at an absolute crisis point in terms of productivity, and it damages the welfare of everybody in this country. And so that needs to be figured out yesterday, right? And I think what Theo is referring to is perhaps each party's plan to sort of accelerate growth and productivity growth in productive investment, right? Investment is what boosts productivity growth and potential growth, not buying condos and flipping condos.
So
right?
no, absolutely. To both of you, foreign direct investment, I mean internal investment, we're hearing a lot about pension plans sort of switching. I don't know if they should or they shouldn't, but the domestic versus foreign, Theo, on investment.
Well, I mean, I don't, yeah, and I'll take any investment whichever way it
Sure.
comes.
Okay.
We have seen capital flight out of Canada now for about a decade, and I realize that Trudeau's in power in a decade, but I don't, I'm not suggesting a causality there, but we have seen a lot of that capital flight has been in the financial services sector. And Canada is in the middle of an investment crisis. We are not seeing, obviously we're not seeing Canadian businesses invest as much as, they need to invest. They prefer to invest in the US primarily. So we've got, Ilan was talking about a productivity crisis, which essentially is caused by an investment crisis. We have an investment crisis in this country. And if could we bring in foreign investment? Sure, but probably the reasons why Canadian businesses are not investing in Canada are the same reasons that foreign businesses are not investing in Canada, because the investment environment is a very difficult one, particularly in an environment where it's very difficult to get infrastructure built for many reasons. So yeah, I mean, this is the challenge, and I think if you make the investment environment, an attractive one, I think you'll see both Canadian and foreign investors come into Canada.
Yeah, I would completely agree. I mean, so Theo said it. He'll take any type of investment. So growth is growth, and investment is investment. Except too much of the investment in Canada has been housing, right? And so
Absolutely.
that has sort of, I think capital goes to where it achieves the best risk-adjusted rate of return. And for the last at least 15 years in Canada, it's been the housing sector, right? Or condos. And instead of productive investment and infrastructure that actually boosts productivity and potential growth. This is the transition we need to see. And I honestly, we're seeing the damage from it, right? So we're seeing way too much housing, unaffordable housing, and not enough actual productive investment. So economists like myself and Theo, will look at things like the age of the capital stock. It's ancient in Canada, right? And this is just not something that you're seeing elsewhere in the world.
Let's put this to you, probably Theo, maybe both of you. So could we get perspective on how each candidate is positioned to develop economic and security partnerships or further relationships with China, India, and really broader Europe as well?
That's definitely a Theo question.
Yeah, okay.
Yeah. I mean, I think China is not something that anyone is going to really ponder. I mean, the situation in China. I mean, we've been distancing ourselves from China now for more than a decade. The Canadian policymakers had been flirting with China in terms of kind of a strong kind of commercial partner. I think around 2012, I think when we had that Sihanouk-Nixon kind of situation, and ever since then, the tensions between the two countries have made it impossible really to consider it a strong trading partner or someone we can rely on. And of course, we wouldn't even if we wanted to, we wouldn't be able to do it because of how the Americans see the Chinese now. So it's not really a go-to place for us. I think there's clearly some potential in Asia in terms of getting our energy there, and that's just kind of more broadly, a commodity. So you don't really need, you get oil to Asia. It doesn't really matter where you sell it. It's a commodity. You're just kind of, you don't really need kind of deeper economic links. In terms of Europe, I mean, Carney would presumably be better at that because he understands Europe a little bit better than Poilievre, and was actually in his 1 week as prime minister before the election campaign. He actually made a trip to Europe. So clearly, it was a strong signal that he sees Europe as a potential trading problem. The problem with Europe is that people forget we actually have a free trade agreement with Europe right now, with the EU and with the UK. It hasn't really been that successful. I mean, we are not really, outside of trading with the US, we really don't do a good job of trading, and diversifying is not something that you can just switch on. So, I mean, fundamentally, I think we need to figure out what we're going to do with the US, which is difficult to do right now because we don't really know what's happening in the US. So that's just this big unknown, and how to address the situation. But I think, if Trump weren't so belligerent, I think you would see some openness in Canada to figure things out with the Americans, because that's who we know, that's who we trade with, have traded with for a very, very long time. And even before we had a free trade agreement with the US was still our major trading partner. About that, we traded, we depended on the US as much before the free trade agreement in the 80s as we do now. The only difference is that our economies are more integrated, but we still kind of relied heavily on the U.S. Really throughout our history. So, putting aside the Trump factor, I think our preference, and certainly if you look at Ontario, so heavily depend on the U.S., the manufacturing sector there. I mean, I think Doug Ford, if he had the option of a customs union with the U.S., he'd take that right away.
Right.
So I think just as the politics that's getting in the way, I think it's very difficult to deal with Trump right now. And obviously he's, he is, his talk about sovereignty and annexation makes it, it makes it impossible to really deal with him. But I think our preference, our economic interests are still with the U.S.
Okay, so interesting to hear that. Let me just see if we can squeeze in a question. The topic of national unity has been brought up by other leaders in this country, and I just want to get your thoughts on that, how seriously we need to worry about that, and what it means to hold it all together in a moment like this.
Yeah, I mean, that's an interesting question. I think that's kind of the sleeper issue in this campaign is national unity, and I worry about that because we already have a very kind of divided nation politically. The Liberals have been in power. The Liberals have not have been in power since 2019. So they won a majority in 2015. They won a plurality of votes with a majority of seats, and then in 2019 they lost not only their majority, but they also did not get a plurality of vote. The Conservatives had got more votes than Liberals in 2019, and the Liberals kind of stayed in power with support of the NDP. And then in 2021, we had another election. The Liberals failed to get a majority, and they failed to even get a plurality. So the Conservatives again got more votes in 2021 than the Liberals, and the Liberals stayed in power with the NDP. And so you have a situation where we've had for 4 years, 5 years, 6 years, where the governing power, the governing party has actually not had the plurality of votes. Okay. And most of these seats and votes that that the Liberals and the NDP have had are mostly in cities and in eastern Canada. So you've had this kind of large group of provinces and people in Canada who have voted for not the winning party, obviously, but the party with the most votes, and feel unrepresented. So imagine a situation where, again, the Liberals win only a minority and fail to get a plurality, and then push ahead with policies again that the West feel is kind of not favorable to the West. So, and you're going to get situations. You're already hearing the kind of talk out of Alberta about whether Canada kind of works for them. So you're going to get a situation where national unity, especially if we get another kind of divided result in the election, starts becoming a serious issue.
We'll have to leave it there. No, I wanted you to outline that for us, because that's also something that obviously is being traversed. Ilan Kolet, just a quick note on, steady hands at the ship as we go through this.
Exactly. I mean, again, we follow our 4-pillar research process. Yeah. We move incrementally with that process, and this is why these portfolios have that tactical flexibility.
Fantastic. We should do this again. Theo Argitis, it's just been a delight to see you again. Good luck at the Hub. We will be watching and reading. And Ilan Kolet, always great to see you and have you join in this conversation. So best to everyone.
Thanks for listening to the Fidelity Connects podcast. Now, if you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. On fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on X. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.